Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of these patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, okay, so first a quick look once again at my longer term monthly charts. As I highlighted 5 weeks ago, there had been some very interesting actions taking place. So the market, since as far back as the low seen in August 2024 till October 2025, built a sideways action. I noticed this action 45 weeks ago, and I will expand on that part shortly. But I first wished to see that this sideways action had a breach on the upside in October 2025. And the market tried stabilizing over this sideways action, originally between about the 2019 to date uptrend, which is currently at 982 and a quarter, up to the topside congestion at 1105 and a half area. Initially, we seem to have established a basing action around a triple bottom, formed over August 2024 to August 2025, and there is where our caution I gave back last year applies, and I quote, once again, as I have done for quite a few weeks now, feel obliged to caution you on the possibility of a false break higher. And that's the end of the quote. Prices failed at the mauve 3-year moving average, currently at 1162 and 3/4. And in December last year, they fell away lower with a combined monthly bearish engulfing pattern, plus a bearish open and close long black Mariboso. This has led to the market heading back within the original sideways action, with all the implications that may have. Now, the most immediate thing to consider is the possibility that prices may head down to the two targets below for the 2020 to 2024 very large head and shoulders top pattern type. You can see the bright red neckline highlighted with this pattern overhead, which is currently at 1213 and a half. Thus, the primary target X is down in the 907 zone, and the secondary harder to reach target X1 is down in the 624 zone. Please note these are very, very, very long-term charts, and you should always be considered thus. Back now to my daily charts, and you can see that same bright red neckline close to the top of my daily chart. Now, in addition to this bright red neckline, 45 weeks ago I highlighted here on my daily chart a bright pink July 2024 to October 2025 rectangle pattern, which you can see here, which is currently 982 and a quarter to 1107 and a quarter. This is the outline of that basing pattern I spoke about on my earlier monthly chart. This pattern had worked until late October last year, when prices punched up through the upper pink trend line, taking most of November 2025 to stabilize over it, and interesting in the process, forming a small lopsided head and shoulders top pattern. More on this one shortly. Now, 8 weeks ago, prompted by the bullish action on Winnipeg canola the previous week, I drew a dark blue mid-December 2024 to early August 2025 bullish Andrews pitchfork. What is noteworthy about this pitchfork is the effect the dark blue middle line above, which is currently 1181 and 1181 and 1/4, had on the market. It was a cap, a pierced cap, I grant you, but still a cap over most of November last year. This caused the market to develop to perhaps the most interesting short-term pattern here. The previously mentioned late October to mid-December 2025 head and shoulders top. Now, 7 weeks ago I said about this pattern, I quote, "This is not fully justified, as prices have only yesterday dipped below the neckline." It's currently 194 and a quarter. Thus, I cannot lay out targets below us yet, but I can set out some potentials. Hence, a primary potential will be down in the 1107 zone, just around where the bright pink broken upper trend line lives, whilst the secondary potential, a harder to reach potential, will be down in the 1080 zone. Please note these are just potentials at this time, as we sit with only one close below the neckline, and there is still a significant chance for a false break on the downside. End of quote. Now 6 weeks ago I added, and again I quote, "This pattern is fully justified, with the market already reaching the primary potential now target at 1107, and the secondary hard reach potential at 1080 area becomes target X." And that's the end of that quote. Now 5 weeks ago prices reached the secondary target X. 6 weeks ago I had hoped three things might erode the immediate bearishness. They were: 1, the old pink breached upper base trend line; 2, the 50% Fibonacci line of the May to August 2024 move at 1098; and 3, the rising green short medium moving average. That's currently at 1096. Well, they did not. In anticipation of this, I added at the time, and I quote, "If it doesn't, then we have little support until the 50% Fibonacci line of the August to date move at 1067 and a quarter, and the nearby change gap 1063 to 1070 and a quarter." End of quote. Now the market duly fell to these levels and overshot on the downside. Again, I anticipated this when I said 5 weeks ago, and I quote, "I would add to the mix the rising mauve medium moving average, currently 1074. Now, if these give way, which is possible, then we have nothing until the long moving average, currently at 1054 even, and the dark blue lower time, which is currently 1062 and a quarter. What is interesting about these two is that they are in the midst of the congestion from earlier this year, between about 1061 down to 1020 on the wide, and would likely be a suitable resting point should the 50% Fibonacci line at 1067 and a quarter fail to hold it, which it might." End of quote. That's the actual end of the last quote. Well, we have seen just that, as the long moving average and the rising dark blue lower time eroded the bearish incentive and left behind a new pattern, a small mid-December 25 to mid-January 26 double bottom. Yesterday prices closed above the midpoint of the double bottom at 1071 and a quarter, and also ever so slightly over the mauve medium moving average. Today we are higher. Thus, this small double bottom pattern can give us the immediate primacy target X here in the 1096 area, with the secondary hard to reach target X1 up in the 1105 area. Both of these targets put the market up in the green short medium moving average area and the 50% Fibonacci line at 1098 area, though still just under the bright pink upper trend line, and that is noteworthy. Chicago soybean meal. I stated 6 weeks ago when talking about the top side, and I quote, "Two others that need to be noted. The first is easy enough. It is the high for 2025 at 326.60. Interestingly, around there we have some other resistances, notably the 50% Fibonacci line for the May 24 to July 25 move at 326.20, plus some congestion at 326.90. So that altogether, they make an overhead congestion area between about 326.20 to 326.90. Then above this is the 61.8% absolute Fibonacci line at 336.30, and I will leave it at that." End of quote. Up at these levels we indeed found resistance, though the peak 9 weeks ago was short of testing this 61.8% absolute Fibonacci line. The next question following this was simple, and I asked it 9 weeks ago, and I quote, "The next question is simple. Do these resistances form a top or a bullish halfway hesitation?" The answer is not obvious yet, though we did have a horn top which failed, and then higher a 2-day bearish tweezer top pattern, from which we saw the outcome in a fall back below the interesting 326.20 to 326.90 congestion. End of quote. Well, the question was answered. We had a top, as we formed a late October to early December 2025 head and shoulders top. Early 7 weeks ago, prices broke down through the neckline, which is currently at 329.40, and carried on lower. 7 weeks ago, I said the following, and I quote, "Thus, I have laid out some possible targets below for this pattern. For primary target X down in the 308.70 zone, and a secondary harder to reach target X1 down in the 299.80 zone, close to the 50% Fibonacci line for the whole of 2025 so far at 298 even. and at the start of the big congestion from April to August 2020. End of quote. 7 weeks ago, the market reached target X, and then 6 weeks ago, prices reached down to target X1. And as I said at the time, and I quote, we have seemingly started to halt and even consider pulling back up, as not only do we have that congestion mentioned between April to August 2020, but we also have the short medium moving average, currently at 308.90, and the 50% Fibonacci line for the whole of the 2025 move so far at 298 even. I am now watching carefully to see if this is just a pause before moving lower, or is it the start of a basing action? End of quote. Well, it all looked like a basing action until the market made 5 weeks ago a combined shooting star pattern, type 1 bearish, and a bearish gravestone doji, and prices dropped back down below the short medium moving average. The peak in late December last year ended up making a small cat's ears pattern. Now that is a type of double top that forms after a steep drop, such as the one we had in late November and December. The primary and secondary targets of this pattern were finally reached last week when prices reached down through the 50% Fibonacci line, a mauve medium moving average combination, and halted just under the gold flatlining long moving average, currently at 293 even, and at the congestion at 290.80, which is within the big old April to August 2020 congestion, and that's between 292 even to 282 even to 300 even. I said about this zone 5 weeks ago, and I quote, "Is this enough to hold it? I'm not sure, but it's enough to make the market think about holding, as further down we have the medium moving average and the long moving average. Thus, from the 50% Fibonacci line at 298 even down to the long moving average is where we will see if prices can hold this zone." And that's the end of that quote. This move down has left us with some interesting possibilities, as the whole mid-December action from the cat's ears pattern to date can be either regarded as a bear channel, which is currently 288.90 to 304.70, or a possible descending expanding wedge pattern, currently 287 even to 304.70. I'm more in favour of the bear channel idea, as I am not a great fan of descending expanding wedge patterns, but we shall see how this develops. Finally, this commentary would not be complete without my discussing a portion of my commentary which I've repeated for 137 weeks, so for over 2.5 years. It is the annual key reversal seen here at the end of 2023. I said back then, and I quote, "I now only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since. I've always," and that's the end of that quote, "I've always added this ever since, and I quote, there's only one thing you can take away from any of my musings, let it have been those words." End of quote. For over 2.5 years, the shadow of that pattern has darkened the skyline of this market ever since. Chicago soybean oil. 10 weeks ago I said, and I quote, "With all the activity in the soybean complex, it was time I finessed this daily chart to show a better and clearer view of what is going on. Thus, the key pattern here is the newly expanded, sorry for the pun, the newly expanded dark blue April to date, so that's April last year to date, April to date ascending expanding wedge pattern, currently 53.10 to up off the top of my daily chart. This pattern," and that's the end of the quote, "this pattern, specifically the dark blue lower trend line, has until mid-December last year acted more as an attractor than an ascending expanding wedge pattern trend line. Back in September to October last year, the market started growing a new pattern, a bright red mid-October to mid-December expanding wedge pattern. Neither an ascending nor descending, just an expanding. So it's neither ascending or descending, it's just expanding wedge pattern. And it's highlighted in bright red on my daily chart. Currently 47.73 to 54.05. Now, you could argue this is a complicated double or even triple bottom, and I could see your point. It is just that I favour the expanding wedge pattern, as it's a better fit for the market's actions. Going back to that triple bottom idea for a second, we did form over late December last year and the very start of this year a double bottom, from which we have already reached the primary and secondary targets topside, as well as retiring the secondary downside target for the November base double top, as the primary one ones that were there when they were reached were enough. What this comes down to is what I set out to do right at the beginning of this section of the commentary, and that is to, and I quote, to show a better and clearer view of what is going on, end of quote. I think this expanding wedge pattern may just be that. Now, yesterday's action of a long bullish engulfing pattern made a significant close over the 50% Fibonacci line of the July 23 to August 24 move at 53.59. The first since August last year, as well as over the February 2013 high and the significant bright red upper trend line of the expanding wedge pattern. We seem to be trying to stabilize over these resistances and make them now into supports. If we do, then next time I'll start looking at top side, maybe not targets yet, but top side potentials. It all depends if we can now stabilize at these higher levels, and this week ahead will be important in this matter. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.